extremely energized to welcome our key panelists. We have with us Mr. Srinivas Rao, CEO of CUSEC, right. Can you please welcome Mr. Srinivas Rao from CUSEC. Mr. Ashish Singhal, CEO, IBDIC. Ladies and gentlemen, please put your hands together. Mr. Manhar Garigrat, Country Head, Liminal. And we have with us our moderator, Krunal Soni, CEO of MINDEF. Ladies and gentlemen, we are going to have yet another brainstorming session. So be abreast of all the latest updates from the world of technology, which is for a purpose. So here we are about to start our upcoming session, which is Metropolis FinTech Panel, that is blockchain's role in financial and technological integration.
Yeah, we still see some enthusiasm here, so let's start. So before going forward, like with any kind of questions and all these things, like I would just like to appreciate the organizer, Sunil, Agri, and I think Omika, for like creating such a wonderful platform, where especially in Gujarat, like I've been working in blockchain space for like more than 8 years, and I haven't seen such kind of mature people and event happening here in Gujarat. So appreciate their efforts and wish to see more such kind of things in the Gujarat, and especially like what better place than the gift city. Okay. So I think let's start with the topic. So if I say based on my experience, I think so. What I say there are two things here. One is like the crypto, where we are envisioning like a different alternative financial system, right? From the existing financial system what we have right now. And another thing is like the DLT. This is distributed ledger technology, which works hand on hand with the existing financial system. So let's discuss like what is the role of blockchain into the fintech or the financial system and the integrations, right? So we have such a wonderful experienced panel here. So I would start with Mr. Srinivas sir. Because he's carrying a lot of extensive experience with the banking, right? And he possesses like all the understanding of the challenges with the traditional banking finance system, right? So I would like to know from him, what is the role of blockchain to overcome those challenges and address those challenges which are currently there into the traditional banking finance system. Yes, sir.
Thank you. Good afternoon to all. Before I answer the question, I will introduce myself. I am the CEO of GUSEC. GUSEC is a startup incubator promoted by Gujarat University. I have been in this role only for 2 months. But my experience has been with the State Bank of India for 33.5 years. I superannuated as Deputy Managing Director, Chief Risk Officer. So out and out commercial banker throughout my career. So as far as the role of blockchain is concerned, I can see my experience evolving since 1990 till now. The banking has undergone a change. How blockchain can change the way the banking is done. In the traditional banking, you can start with the KYC part, because that is the way we establish a relationship with a bank. If any customer wants to have open accounts with multiple banks, he has to do the KYC process multiple times. But with the help of blockchain, if the digital identity is established, the whole process of onboarding a customer becomes much easier for the banks as well and for the customers as well, because banks are facing identity theft problems in onboarding customers. Many times it comes to our notice that bank customers actually use the fake identity to open the bank accounts. I'll quote one example. Recently, 6 months back, one bank has lodged a police complaint about one case where 300 accounts were opened. In all the cases, the Aadhaar is genuine, Aadhaar number is genuine, PAN is genuine, but all 300 accounts have only one photograph. So identity theft is a major problem in commercial banking. So this is through blockchain technology, the digital identity. I will not go into details because Indian Bank Digital Infrastructure Company is working on this, so I leave that details part to him. Again, that company is promoted by Indian banks, including State Bank of India. All banks are stakeholders in that company. He will take this forward. This is one way, starting with the KYC part. The overall blockchain is going to help the operating costs of the banks to come down first, and secondly, the transaction costs for the customers would go down. I quote only few examples. I take few examples like nowadays the personal loans of the banks are very popular. I think a large number of borrowers are availing the unsecured loans. Unsecured loan, basically the banks are required to verify only two things: the identity of the customer and the salary documents, whether they want an income document. These two things, right now, a lot of in the conventional banking, these forged documents are available. They can fool the banking system, but once we move to the blockchain technology, this can be addressed. The most of the important applications of blockchain would be in case of trade finance. Because trade finance is going to be a major beneficiary of this blockchain technology. In fact, the IBDIC is working on this domestic LC facility. So trade finance is going to be one major beneficiary of this blockchain. Another part is the cross-border remittances, especially cross-border remittances. In India, we don't feel this problem of the payments because Indian payment systems are very fast because they are 24/7 RTGS, NEFT, but in other parts of the world it's not so, especially in cross-border remittances. Especially those people in the African countries, if they have to remit money, they are paying huge amounts of fee, and it takes long, huge number of days. It could goes up to weeks. Even in India also, if you have to remit 2 years, maybe it takes a day and a half, 2 days. But blockchain technology and using of stable coins, the entire cross-border transactions are going to be revolutionized. And other than this, smart contracts actually going to bring down the routine way of doing banking, the collections and all. It will be automated. And one last application I can think of is about trade finance. We have one more thing. Right now, the traditional banking is working on the centralized database. So because of this single point of failure, this threat of cyber attacks is much higher. In a decentralized banking system, this can be addressed to a large extent. These are few things I could think of how the commercial banking is going to be revolutionized by the blockchain technology. Thank you.
Thank you so much for the great insights. So I mean, like these all use cases are like we've been discussing on the table, like when we talk about the banking and finance and blockchain, right? So that's very clear, like from that. But on the same note, like when you mentioned the trade finance, so I would like to know from Mr. Ashish, you have more insights into trade finance, like how blockchain is helping with the streamline of the processes with the trade finance.
I'm Ashish. I head IBDIC and Digital Infrastructure Company with a consortium of 18 banks. And I'm glad that this is a question to the origination of the organization and operation of the company happened with trade digitization as the core use case. And at that time, we were known as the Indian Bank Blockchain Infrastructure Company. If you were to look at it, a lot of use cases narrated by Mr. Srinivasan. Blockchain as a technology, I'm sure you've learned through the day as well, if you didn't know it earlier, is essentially providing a trustless environment. And if you were to look at a trade, you would essentially have very simplistically put a buyer, supplier, bank, supplier, bank. And in spite of the fact that the UCP guidelines and overall trade processes have been cast in stone for a very, very long time, unfortunately not too much of digitization has happened there. And also, still the paper flows between the buyer's bank and the seller of the bank, and the intimation to the buyer and the seller right from the time when the request for LC is initiated to the advising bank, to the negotiating bank, and payment settlement, etc. So what we are trying to do is have a blockchain-based solution where all the participants, which means all the banks, all the corporates, would be on this system, and a seamless paperless, presenceless transaction will happen, and typically a domestic LC, which is anywhere between 7 to 10 days as a average cycle, can hopefully be done in less than a couple of hours. So that's really what we are intending to do. Still early days. It will take time. So our product is under development. In FY25 we should launch it, because and obviously it will have the advantage for the corporate would be that when it is a multi-banking scenario and a corporate is banking with multiple banks today, they have to go to internet banking or the bank branches of individual banks and say, okay, I want to utilize this limit, I want to now utilize the limit from somebody else. In our system, corporate will be able to see their limits across the banks, and they will be able to issue instructions to that particular bank for whom they want to utilize the limit. And that's really the power of the network which we bring to the
Yeah, thanks. So, on the same note, like I have a question, like see, trade finance, like a lot of benefits that we can leverage from the blockchain. But at the same time, like a lot of challenges are over there, like when multiple stakeholders are there and they're running their own systems. So how it is challenging to bring them on a one system?
I think one of the reasons when we see or why we haven't seen so much of blockchain coming into the real life situations is because this divide between Web 2.0 and Web 3.0. So at least from the way we are thinking, the tech part of it will completely be in the backend. As far as the corporates are concerned or the banks are concerned, they will continue to be in Web 2.0, and we will publish APIs which can get consumed by the Web 2.0 system which they have. The other important piece for us would be that from a blockchain perspective, wherever we need immutability, wherever we need things from an audit perspective, will only remain on chain. Everything else we will keep off chain, and that will also help us in taking care of the scalability issue which is inherently there in blockchain. That's how we do it.
And that's a very good point. Like, that's a very good point about the blockchain. Like, blockchain is like a lot of people understand try to implement everywhere. Like, they just want to replace the system with the blockchain, but that's not true. Like Mr. Ashish said, like we have to be the blockchain as an integrated technology to the existing one, which is Web 2, what we are calling, right? So then we are going to leverage it at the maximum, right? So moving on other points, like so when we are talking about decentralized finance, right, as an alternative to the current financial systems, so digital wallets are very much important as an entry point for user adoption, right? So I have Mr. Manhar here, so I would like to know with to him like how the digital wallets are playing a role in a seamless integration between the current fintech financial technology and the emerging digital decentralized protocols, and what kind of opportunity it brings in terms of financial inclusion and innovation.
Sure, thank you for that. So very quick introduction. My name is Manhar. I work with a company called Liminal Custody Solutions. We are essentially wallet infrastructure and custody services provider. Custody as a concept is a fairly familiar concept with everybody in the traditional financial world. Where obviously now we're seeing this shift happen in the digital asset space also. Very interestingly, this new technology paradigm that has come, it has presented us with this opportunity to have what is known as self-custody. Okay. Now we had this in the traditional financial world also. We could all keep cash, right? And we've seen how economies work with the function of cash. And then you had the banks where you could also keep large sums of cash because it's not physically possible to carry so much cash around, right? If you're going abroad, so on and so forth. In the digital asset space, because all of this is on technology, because all of this is in binary codes, it becomes very easy now. And then you have this 24/7 availability layer in the form of that public blockchain. All you need to do is you need to be a part of this network by getting access to a wallet. And what is this wallet? How is this different from, let's say, your Google Pay or your Paytm wallet? Your Google Pay or Paytm wallet is a database which is maintained by an entity on your behalf. In this case, because you're directly connected to the blockchain, This wallet is a slightly deeper technology play because it includes cryptographic techniques and it has what are known as a private key and a public key, right? So effectively, you have to keep your private key, you have to secure your private key, and you are able to, sort of make transactions or sign transactions whenever you want directly onto the blockchain. As opposed to in your Paytm or GPay wallet, where you would issue an instruction to Paytm, Paytm would take that instruction from you after your fingerprint login, ensuring that it was you who gave them the instruction, and then you would put in your PIN and you would, make that transfer. They would do it on your behalf, right? So these are the primary differences. I think coming to your discussion around DeFi and sort of internet wallets, given that we understand what these wallets can do, this spawned this very interesting new form of finance, which is known as DeFi, decentralized finance. Right now, because I'm directly connected to this network through my wallet, I can transact from my wallet to the other millions of wallets that are connected onto this network, and I can do this in a peer-to-peer fashion, right? So, sir was mentioning about unsecured loans, or if you talk about loans today, even if you have a hard asset today, and if you were to try and utilize that in a traditional financial system, you would have to first prove ownership of that asset. So, if you have a house and you want to loan against that house, it's going to probably take a good amount of time to establish the fact that you are the true owner, and then the property valuation will happen, and then lots of things will happen, and finally you may get some, you may get your loan disbursed. Now let's come to this one, right? If I have an asset in the form of, let's say, this digital asset or this cryptocurrency, as they call it, right? And it has an inherent value in the eyes of everyone in the network. Let's say that value is $100. If I want a loan of $100 in another currency, I can actually utilize this asset. I can put it as a collateral. I can immediately get, the loan amount that I want. Somebody else is going to take this token from you and is going to probably use that to generate more income. And this is happening at a global level. So the liquidity that, the access to liquidity that you have is phenomenal. So I think this is the great opportunity, and in this also is the great challenge. How do you bring both of these worlds together? How do you bring this KYC, AML compliance into a network which is completely anonymous and which is running by itself and which is enabling so many transactions? How do you ensure that those transactions are transactions? I think that's the broader play here. That would be my comment around how the wallet and the DeFi and the traditional banking sort of interplay is happening.
Yeah, thanks for that insight. So, on the same note, like the DeFi, we've been working on for more than 5-6 years now. Like a lot of use cases being implemented into DeFi. The particular use case that you talk about, the digital lending also, and that has numerous advantages for the physical or the traditional lending processes right now we have, because everything is getting decentralized and everybody get the access to it, right? Without having less collaterals and all the things. Continue with the DeFis. I just like to continue with the question with you only. Like there are few things if we compare with the traditional finance. So one thing is like how we are going to balance between privacy and yet the compliances for the DeFi sector.
So that's the difficult one that everyone in the world is currently grappling with, and I think that's the challenge we face whenever we go and speak to various regulators. So I think if you look at this panel also, I think we are in that spectrum of hardcore banking to something in between, and then this complete sort of crypto and digital asset world. So I think somewhere in between we have to come together. We have to meet. We have to try and bring both of these solutions. There are some very interesting technologies like zero knowledge proofs. Okay. Now, because all of this on the blockchain network, all the transactions happening between wallets are publicly available on the ledgers, right? Anybody can view them. That has advantages as well as disadvantages. The disadvantage, of course, is lack of privacy. If I come to know your wallet address, I can just keep a tab of where all your spending is happening, and I can actually keep tracking you, and I can keep surveilling your every transaction. It not just mean the entire world can know. Okay, that's a very risky thing. We don't give access to our bank accounts to anybody and everybody, right? So that's the disadvantage. The advantage is that uh, because each and every single transaction is tracked and then it is put up on the chain, you always have a sort of breadcrumb or you have a trail. Okay, so there are a lot of people. I think until last year, one of the biggest critiques for digital assets we used to hear was they are anonymous. You don't know what's happening. It's difficult to find out where who's sending money to them, etc. But because of this inherent traceability and because of this inherent recording of every transaction, turns out that it may take 2 years, it may take 3 years, 5 years. But if you know a certain wallet address has hacked funds, you can keep surveilling it, and you can keep surveilling it to the point that the fund starts moving. Because what is the point of hacking money if you are not going to use the money, right? The fraudster is eventually going to try to move that money and use it. The moment he or she tries to use it, you have this entire transaction data. And there have been various instances where $4 million worth of Bitcoin was recovered, say after 5 years. Surveillance was happening, intelligence was building. So this is like the advantage over, let's say, a completely cash economy, right? We are all trying to move to digital payments primarily because we understand the implications that a cash economy has. So when you move that entire set of transactions into blockchain, then you have that right default.
Thanks. So we discussed about the digital wallets and very much in details. So again, one more big challenge is when we are talking about the financial technology with the blockchain is about the infrastructure, right? So if we talk about the traditional fintech, when I say traditional fintech, it means like it works without blockchain, right? It has a very heavily developed infrastructure already available. And when we are talking now, we are talking about the fintech which is empowered by the blockchain, right? So we need to be assurance of such kind of infrastructure. So since Ashish has a lot of experience into providing the infrastructure, I would like to have the question to him, like how big is the infrastructure currently for the big blockchain powered fintech, and what are the hazards that we are facing over there?
I've divided it into two pieces. One, on the side, we put it anything and everything to do with 3.0, which is linked to cryptocurrency, which is linked to gaming, etc. And leave it aside for the moment. Then you look at how can the technology be used to actually make a difference to a lot of other things in the BFSI space. Like a couple of use cases, Srinivas, you mentioned. The other use case in India, which is happening in my sense, is it will be the largest in the world in sometimes this entire piece on CBDC. While there's enough and more debate happening at this point in time, what is the point of CBDC for India in the retail side, given that we have wallets, etc. But the moment the next stage of CBDC happens in terms of the programmability of money, it will just explode the thing. Look at a couple of simple examples which will happen. So there's a government subsidy which goes to women folk in the remotest of villages or remotest of places. And that money then finds the way in the husband who uses multiple ways of getting hold of that money from the wife or the lady of the house, and then uses for all sorts of things which ideally the money was not meant for. Now, if that money was for, let's say, for raising of sheep or anything else, or let's say for farming, only to buy particular seeds or fertilizers, etc. And we can track down to ensure that this part of the money only goes towards buying of seeds. And hence it is a CBDC or the digital currency to that extent. But once the money lands into the seed shop, after that it becomes like a wallet, which is interoperability between a CBDC and a wallet. Just imagine what it can do to our economy. take the other piece if you don't want to go to the rural areas, etc. There are enough and more subsidies or tax grants which happen in the old income tax regime, let's say LTA or your mobile reimbursements, food reimbursements, etc. Just imagine what the market would look like if all of that was to be given to you as part of programmable currency. And then even if you were to go to a chemist shop and you were to buy a chocolate, that expense can be disallowed because chocolates have a separate HSN code as compared to a medicine. So a lot of those pieces can happen, and my urge and request to everybody who's at the moment playing on the gaming and cryptocurrency side, rather than trying to say that the regulators should change, and hence somebody mentioned some time back that Gift City has is far off from the Indian regulator. I don't think that's the correct understanding. Right, we might have a separate law for Gift City. It might be not in the purview of RBI, but if it leads to sovereign discomfort, obviously it's the boundaries of India. All those pieces will come. So just focus those energies onto solving real life cases, which probably are a bridge between where we are currently and where potentially with completely digital world can move, like Manar mentioned. Give you another piece. There's so much happening in terms of the entire green ecosystem. So there's enough and more blockchain use cases for ensuring the traceability from where the raw material started from. Another example, which and this is something which is very, very close to my heart, and we are working on that as IBDC, is financial inclusion for MSMEs. Now, there are about 6.5 crore MSMEs in the country. Handful of them have access to formal credit, and that too at probably a very, very exorbitant rate. So look at least on the manufacturing side, if you were to look at it, the last leg of the MSME, which could be a lane job worker. Ultimately, he's adding value to a car which is getting produced by Maruti or Tata Motors. Can we trace down what is the value addition being done by the lathe across the multiple tiers of suppliers, and hence ensure that on the guarantee of the payment which is to be made by Maruti or Tata Motors, even if it is for 1 rupee towards that last lathe job worker, can he get affordable finance? So the technology is great, and there are enough and more use cases which can be done to bridge this gap between gaming, crypto versus regulatory side of businesses which can happen.
That's thanks. That's like, so those are some great insights about the infrastructure and everything.
Sorry, if I may, I think you brought up a very important point. And see, I personally don't believe in extremes. Like I feel it's all about balance, right? So what's also happening within this space, the gaming space and the digital asset space, is interestingly a lot of regulations and regulatory frameworks are developing here as well. So for example, in our case, because we are talking about custody, right? We're going to be licensed now by an international regulator, and we will have a licensed operation, right? Where we will be dealing in digital assets, right? So, and then if you take, if you go further up west, you have the Bitcoin ETFs which got launched, right? So that became a financial use case. Now between both of these, there are probably many more use cases which are looking at digital assets, which are looking at gaming, which are looking at infra. But what is important is to try and understand how they can be looked at from the regulatory side of things as well. There are frameworks, there are ground rules, and there are some very basic things that one has to, as builders or as founders, that we need to be aware of in the form of compliances, in the form of who are the people who we enable with these assets, with these technology platforms that we build. What do we enable, etc. So I think it's important to know that even if you are interested in that space and you want to build there are frameworks developing, and there is a lot out there that we can and we should explore.
Thanks for telling that. So I mean that's a great thing I come to know also. Like I was not aware about that. But yeah, as we mentioned, like if you are talking about like outsides, like Dubai also has like their own regulation framework, like WARA, is very much sophisticated regulation framework, which something which can also look into that and set up something like similar to India as well. Right? Okay, so when we talking about the technology benefits, we also have some limitations as well, right? So I'd like to know from Mr. Srinivas Rao, like what are the current limitations that blockchain has, and how it can be a roadblock for the blockchain to become a part of the fintech integration.
See, compared to the public blockchain, there are risks. In fact, in the morning, Mr. Joseph has beautifully explained most of the risks, and I just only narrate a few of them. So, in economics, there is a theory of impossible trilemma. Like you cannot have independent monetary policy, you cannot have a free float convertible currency and free capital flows. Similarly, in case of blockchains, you have this impossible trilemma like security, privacy, and scalability. So, how do we achieve this? This is the one important thing. So, as long as, because as well privacy is concerned, even GDPR regulations, pseudonyming also treated as personal data. So, only anonymous data cannot be treated as the personal data, but all other forms of data is treated as the personal data. How do you, the right to forget or delete, how do you exercise in case of immutability? The strength of blockchain is immutability of transactions. How do we take out the traces of that? Those, apart from that, there are few things which limit the usage of blockchain is the entire ecosystem has to be on this blockchain to have the maximum benefit. Take the case of mortgage lending you mentioned. For mortgage lending to be successful and fast enough for the borrower, because all of you would have taken the home loan. I think so large number of people sitting in this all would have taken home loan. So it involves large number of parties like builder, solicitor, valuer, bank, and the borrower. So if only few of them are there in the blockchain, you cannot draw the benefit of the whole exercise. For the blockchain to be successful, all those people should be there. Then the mortgage lending would be much faster than otherwise. You would have seen all of you would experience a home loan of 1 month, maybe 15 days if the bank is efficient, or if you are a VIP customer, a week. But if it is same thing is done on blockchain, the whole timelines can be brought down. Apart from that, I think these are the few limitations as far as I can think of blockchain. Risks are to be addressed. Maybe the CBDC, which has been introduced recently, take care of some of the risks. Especially the CBDC right now is being used. CBDC like a digital rupee wholesale is already being used in settlement of interbank transactions as far as the secondary market deals of the government securities concerned. So they're quite successful now. Most of the requirement of settlement guarantee fund, all these things have been taken care of. Now all these become useless. In fact, I am part of CUG as far as the digital rupee retail is concerned. In fact, I have a digital rupee wallet, but after I moved out from Mumbai, I couldn't use it. Otherwise, there are certain CUG players which are the merchants are also there. So CBDC also will be taking care of the risk. Lot of the risk will be taken care of through digital rupee traceability and this money laundering risk. All these things will be taken care of with this digital rupee.
So one of the challenges that you mentioned initially, like the scalability issue, right? So when we talk about the blockchains, like the initial first generation of the blockchains had a lot of scalability issues, but now if you see the third generation of the blockchains, some of those issues are being addressed properly. So we might see a lot of other innovations in this space, like which can solve this problem with the scalability. In terms of CBDC, I just want to understand from you, like what are the challenges currently we are facing with the implementation of the CBDC? Like I understand that currently it's a wholesale banking. We initially started with the wholesale, right? And then the retail also. So are we seeing challenges with the scaling of the usage and adoption?
No, I think with the entire economy hooked up to UPI, I think digital rupee retail is going to be a runaway success, because what is the advantage of the digital rupee is traceability is more important in case of digital rupee. It's not even if you have 1,000 rupees, it's not 1,000 rupees balance. These are currency notes, digital rupees, 500 rupee one note, 200 rupee one note. You have this wallet is filled with your currency notes. Each note can be traced to where its rupee ended. that is the important part of digital rupee. I think whatever has been the advantage of UPI, this will be used to make this CBDC more useful, and it will be, I think, huge success as and when it is rolled out to the general public. And this will also help in your remittances, foreign cross-border remittances. Like maybe even RBI may come out with like your stable coins. Right? Because right now bitcoins, they could be gaga about it, but finally the value of currency is about what is the value, how much is the fluctuations in that value. Because if it is variance is too much in that, the value of store. That value of store function is not being done by digital currencies. Maybe once these CBDCs become successful all over the world, I doubt there could be a problem with this the digital currencies, which are actually I think hot topic today. People are buying as assets, but I really don't know what will be the value of those assets in a future date.
So
yeah. Remittances side and CBDC side, two important things are happening. One is this entire de-dollarization which is being spoken about, and India going and signing to single UPI acceptance in Singapore, Dubai, etc. Just imagine once this stabilizes, then it will only a question of replacing UPI by CBDC, and your entire currency conversion, etc. gets taken care of. That's one piece. The second is like if tomorrow there is a stable coin regulatory body launched in US, UK, etc., then it's only a question of fixing the parity of conversion, and your entire transactions can happen. It will happen over a period of time, maybe even a long period of time, and nothing in the short term. But clearly the focus on trade, particularly from what came from G20 summits, etc., the focus there, my sense is it will happen. The question is not whether it will happen or not, it will certainly happen. It's only a matter of time, and everybody comes in the same boat and say this huge commissions or margins of the time which is wasted from a conversion in one country to another, that gets
Thanks for sharing that. So I think in terms of the CBDC, like when we are going global, like with cross-border also, like so we see some also challenges out there, like because like there are a lot of CBDCs being made, right? I guess more than 150 countries are working on that or already have launched, right? So how we are going to have like a central platform which combines all the CBDCs and make this cross-border transfer very seamless and very efficient? If anyone would like to answer the same.
I don't think there's a need of central bankers. As long as there are protocols set between two central banks or multiple central banks, it will still happen. And today also it exists in terms of the currency conversion rules, regulations. It's just that a lot of disintermediation needs to happen for it to happen smoothly.
That's right.
You know, and then if you look at it on the digital asset side, you have stable coins, and you have all of this that we're probably trying to achieve with the CBDC. We have a lot of them already sort of as an established use case. I think it's very it's a complex situation because while the benefits are all there, I think there are also certain important aspects around the self-sovereignty with CBDC, the amount of ownership and control that a user would have, and what happens in the case of black swan events, right? Because these are governments involved, etc. Of course, in our country we don't have to worry about those kind of challenges, but there are other countries who are sort of grappling with this at a very, very deep and extreme level, right? So surveillance is a challenge. China, for example, we've heard of all the kinds of things that they do, the amount of surveillance that they do. So when these control mechanisms become all pervasive, they can have very different ramifications. So those are some of the issues that come up that also need to be discussed when we talk about these things. Just put that also out.
Thanks for adding. So we have very limited time. I think we are short of time, not limited time. So I just want to conclude with one last question. Anyone of them can answer. So if we see the future outlook, like how do we see the intersection between the finance and blockchain, like for next 5-10 years? Anyone would like to answer? Then we can wrap up this.
So finance and blockchain, I think the intersection is already there. They're so deeply intertwined and entangled, and it's just all in one. In fact, it has given birth to newer terms like decentralized finance and staking and liquidity and transaction gas fees, so on and so forth, right? So it has introduced a lot of new programmability of currency within finance. So I think that entanglement has already happened. I'm just very excited to see how the future, or what this really looks like in the future, and how this is shaped. And it will be important for us to keep all of these aspects that we discussed today and try to find that sort of balance that I was talking about. I think to me that's the future.
Thanks for that. So I think we are done with this, and I would like to thank all of the wonderful panel here for sharing the great insights on the fintech and blockchain. Over to you.
Thank you so much to our eminent panelists. May we now request Mr. Ashish Kumar Jain to kindly come and felicitate our eminent and knowledgeable power mentors, our thought leaders, our change makers, who are here to make our society a really valuable contribution that they have for our society. Ladies and gentlemen, can we have a warm round of applause for all our notable dignitaries here? One more time. Thank you so much, gentlemen, for your valuable time and for sharing your knowledge with all of us. May we all have a group photo session here.